What is up, YouTube? I think we're all good to go. Recording a video a bit later tonight because I was watching Champions League. So for all the Real Madrid fans, you guys must be celebrating tonight. I was kind of hoping Bayern Munich would win, but yeah, Real Madrid is just different regarding comebacks. So looking at the Bitcoin chart, we've been talking a lot about Bitcoin just because it's such an important asset with the crypto volatility going on these days, or not that much volatility these days compared to the previous weeks and months. Um, but that's expected. Price likes to consolidate before having another massive pump if we're going to get it. Maybe we go to zero. Who knows, right? So I only took one trade today, and it was. Let me think. Yeah, I took one. Yeah, only took one trade today, and it was a break-even trade. Um, so I gave you this morning the idea that this distribution could be turning into potential power of three, where the distribution right here, this is your range. This right here could be the accumulation or the manipulation. My apologies, manipulation of retail positions, and then we could have the squeeze up right here, right? The expansion that follows. And it was looking pretty nice. I have to be honest, it was looking pretty nice. So we had this local range going on here. There you go. So we had this local range going on. Just going back in time real quick. We had this local range going on where we had our one tap, we had our sweep, and then we had our third tap. Yes, the third tap, it was a break. If we extend it to the second sweep low, there you go. It was a break, but a break that looks like this, followed by an immediate bullish internal market structure break. Normally, in a Model 1 accumulation like this, you don't expect a lower high to be made, right? So this is still a valid Wyckoff Model 1. So as we know, what we always do is we watch for that market structure break from the top down to break back to bullish. So we have our range right here. Our market structure from the top down is down, up, down, up, down, up, down, up, down, up, with a break right there. And then we also like to check the volume area, which is not a requirement, but it's always extra nice. And look at that, it was all the way at the range lows, right? So what I did is, just because this has such massive potential, because locally speaking right here, we had a nice looking return to zone. So with a nice return to zone right there, did not really have any supply up until this high right here. This is the extreme supply, okay? Last supply before taking the range high. That's why I called extreme supply. Just like that. So I really like this V-shaped recovery, following that third tap. And an entry model is just entering on the break after creating that third tap, if it's risk to reward worthy. So I enter it right here. I put my stop below the low, and the risk to reward, it wasn't the best at all. It's only a 1.6, but I wasn't aiming for the range high, just because we had this trail of liquidity right above the range high right here. If I can put it on my chart, easy to sweep liquidity. And even if you look above it right here, this is also just purely liquidity. And even these highs are bad highs. And this is just inefficiency, right? But it was that 6-hour supply zone that we were also talking about. But if it didn't have a tap and go, it could just squeeze right through and even grab all of those highs, which is the target of the PO3, this high up here. So if I was going to hold this long, I was going to hold it all the way up to here, which would be a 7RR trade. And it's also a nice hedge. That was the mentality that I had. I was heavily short on altcoins, and I was like, you know what, if this decides to end up pumping and the PO3 is going to play out, the altcoins will go up as well. So I saw it as a hedge against my altcoin shorts at the same time, while making nice profits on this trade right here. So that was my target. How did I manage the trade? Entered right here on this candle close. Then price started coming down. This was our retest zone right here. It also had some demand remaining down there, but we were just going to watch where we could see the rejection, right? We would prefer to bounce from that upper section because it's nice confluence with the POC, and technically this whole thing is just one big range demand, right? So I entered on the break right there, put my stop below the low right here. We came down. I saw the immediate bullish candle. I was like, okay, if we break this high, price will come all the way up towards this high, just following basic market structure. Broke that high. Now price is going to come towards this high. Price came towards that high. We squeezed through it, had a full on value area rotation. And the only thing that was bothering me is that we did not mitigate like any of this or this. We had like a more defined range supply below us, right? So I was aware of potentially having like a fake break where we flip market structure in this downwards pull. Let me get rid of these X's. I didn't feel comfortable trailing my stop loss from this low all the way to that low immediately because we had some demand remaining right below it. And I didn't want price to have a fake break just to break back the bullish again and then kick me out of the trade, right? So at this point in time, I still kept my stop loss under this main low. And I kept that until we created another market structure leg. So we came down, bounced off range demand again, took the high again right here. And now our market structure low moved up to here. So at this point in time, I'm thinking in order to get to X, which is this more defined range demand, and even this lower one, yeah, you have to have a very, very, very aggressive break. And it was also a nice high time frame market structure, right? Going on the 3 minute, it's also a nice little 3 minute pull. So I'm like, in order to get to X, to this range demand, we have to break market structure aggressively. And in that scenario, there is always a chance of price, coming all the way back down just to mitigate the demand and go higher, kind of turning it into a Model 2 or just an extended Model 1. But in that case, I would just rather re-enter the trade right here than risk losing money on the trade. Okay? So that was my mentality going into this trade, that I'm like, okay, my stop loss at this point in time right here, it moved from this low towards that low, which was also where my entry was. So it was basically entry. It was like a slight loss. And then we went higher, mitigating the extreme supply to the cent right here. And then we started breaking structure bearishly, very aggressive. And at this moment in time, we had this demand here, but the way we came down was so aggressive that I literally said, I'm exiting the trade. I didn't even let myself get stopped out. If I can pull up the text message right here. Let me grab it so you guys can see. Here. Closing the long, 1711. That's on this candle right here. 1711 right here. I said I closed the long and my stop and my entry was right here. So I closed it for even a slight profit, and then price ended up going lower and stopping the rest out that had their stop loss right there, right? So we had a very aggressive move to follow, and this is not something you really want to see for a Model 1. This aggressive sell is not typical. Normally the Model 1 doesn't play out if that happens, because when this happens, we have to think from a market maker perspective, right? It's like, okay, if a Model 1 was supposed to take place and there was a market maker longing here, wanting price to go up, why did price sweep all buy side liquidity to react from supply with a massive move down to follow. Because then I'm thinking maybe the market maker wanted to fill his short positions by just grabbing all of this buy side liquidity and then mitigating the last remaining supply before continuing down. It changes your whole perspective, right? So instead of a market maker filling his long positions right here to grab all buy side liquidity and squeeze higher, trapping a lot of people in this potential PO3 and pushing price higher, now, because we have such a strong rejection from supply, we can think that maybe he just wanted to fill his short positions by trapping people accumulating at these lows, grabbing all these stop losses, filling his short position here with these buy orders, and then we push price down lower. And that's like a mentality switch that you can do for yourself the moment you see this massive strong rejection from that supply, right? Like the supply doesn't even look that significant and it gives a move like this. So maybe the purpose of this accumulation and this squeeze up was just to grab more stop losses before continuing lower. So exiting replay mode, the price got a bounce from this box, but in this upwards trend, let me delete these drawings. I don't know why I get my chart so messy every time. Here. Okay, so price got a bounce from that last demand zone that we were talking about, but on the way up, we broke structure back to bearish, and that was your signal that that long was not going to work anymore. And what followed was a lower high for a lower low, and now we're going lower. So that's how I managed that trade. So you guys know it was a break-even one. I still have to note it down. I just realized I have not noted it down yet. So I'm gonna do that after this video. But now price is just really hovering around these lows. And if we start closing a 4-hour candle here, I think the candle closes in 2 hours. If we close a 4-hour candle here, I'm pretty sure that every move up is just going to be a lower high eventually for this inefficiency fill. And I have to admit, secretly, I am celebrating a bit because I'm still holding the fucking Matic trade, bro. Oh boy, like this is literally the last support. Where we are right now, this consolidation, this is the last support. If you lose this volume area low, we are coming towards X marks the spot. Like, I would be very surprised if we don't. But yeah, I'm still holding the Matic one. I'm still holding the Solana one. However, I just posted on Twitter as well. This is the Solana setup. The shorts there and then the profits along the way. I have been taking profits along the way on Solana. And I have been leaving Matic. And I haven't been touching Matic. So I'm diamond holding Matic, having diamond hands. While slicing profits on Solana. Just because in case this reverses, right? I have been taking good profits on Solana, and I haven't been completely missing out in case I don't get a long, right? Because it was never my idea really to keep this trade all the way down to here, but it could happen. So I left like 20 to 25% to run down there after taking 75% out. And I've been slicing off a 5% and a 5% and a 5%, leaving little to run. But it's still nice compounding gains, But that's kind of how I'm doing it. We just swept like an easy liquidity sweep down here from these lows, so that's where my take profit was. And I have finally created sub accounts and other accounts also on Femex. So while holding the shorts from above here, I can scalp along the way. But low-key, there wasn't really anything on Solana or Matic today. So really no trades besides Bitcoin that ended up being a break-even trade. Just holding the Sol and Matic short, which literally they will, if that Matic short hits, it will make me like 30% in one trade. Like, it's crazy, because I went hard on the risk, right? So yeah, pretty not that much to talk about even on euro and on gold. there hasn't been any trades. We came down, we came up, we consolidated, we came down, we came up, we came down. Really trending environment, not really having a range or any Wyckoffs or range deviation plays. So the only thing nice on Euro was this morning. Looks like we kind of had a Model 1 here. Didn't even realize that. Was there structure? Oh, it actually was. Just seen that now. I was not paying attention. The only thing that was nice on Euro, what I was watching this morning, is that if I just delete these drawings. So from this morning, right? Your typical Forex ICT or guru concepts played out, where this is your oh, I need some water, bro. Okay. This was your Asia low, right? So this liquidity point is your Asia low. And overall, the market structure was trending down, right? Following your market structure from the top down, it was down, up, down, up, down. You left loads of sell side liquidity below you. And then in this move up, so we know the market structure high is right here at that moment in time. And on this move up, we started breaking internal structure right here on this 1 minute pool. So you SFP'd it first, and then you had your confirmed break right here, your boss. So I put it on my chart that this could be a short. Also because the supply zone was supply created supply, like this. So you had that 1 minute order block with imbalance right here that created this supply zone. And you know, guys, I love to trade the second taps of the supply or demand chains. And you almost got a reconfirmation, but there wasn't a valid pool. But I put this on my chart that this could be a short, like here, targeting that Asia sell side liquidity for a 2.8% gain. And it worked perfectly, you know? The moment you took this low, the moment you took that low, you could have moved your stop up to there, and then the moment you took the low again, you could have trailed it down to here, and then your take profit would have been hit, right? It's a typical setup targeting Asia sell side liquidity. However, it's just not really a part of an entry model of mine. Yes, you're following the market structure from the top down, so you have like a market structure continuation trade with an order flow objective of this Asia low. So I could form it into like a setup, but it's not really a fixed entry model of mine. I don't normally trade Asia highs, Asia lows, but I do know that they work pretty good on Forex pairs, right? So that was nice to see. And then what can you expect? Well, now we grabbed all Asia sell side liquidity during the London Open, because London opened right. Oh, London opened right at our entry. That's actually a pretty nice confirmation. So London opened right there, and that was our short entry. And then London pushed price down to grab all sell side liquidity. And then what can you expect if you grab all sell side liquidity and you break market structure back to bullish after SFPing a low like this? You can have a reversal, right? Or a reversal. I don't know if I said that clear. So I was looking at this. However, because now I was looking at it from a range play, you know, where this is just your big range right here. Let's get rid of this. Now I was looking at it from a range type of play, where this is your big range. And I was looking for a potential long after grabbing all sell side liquidity and then breaking back inside. The only problem is, guys, we had no valid 1 minute market structure. Like, for a market structure to be valid, you need consecutive bullish candles, and we did not have that here. So this was not a proper break. I have to follow my rules, even though it looks so clean. It's not a valid break using my market structure rules. So I could not take the trade, but it was a banger because the way you came down, you left loads of buy side liquidity this time. So it's really nice to see. and maybe you guys want to note it down, of like forex pairs, they love their session liquidity points, you know? So right here we had a market structure continuation trade following the overall downtrend, targeting Asia sell side liquidity, which was tapped right here, and then we smashed through the Asia sell side liquidity, broke market structure back to bullish, is what I would love to say, but it wasn't a valid 1 minute market structure pool. And then we mitigated the demand that was remaining, and then we went higher from there, you know, targeting all of this buy side liquidity in that range high. So it was very clean price action. I could have taken the trade right here, but I decided not to, just because it's not a, I wouldn't call it a high probability setup in my books. It looks really clean. I just need to do a bit more research on forex pairs regarding session liquidity points. If I've done a bit more research on that, maybe I can add it. But I just have not done that, right? So I didn't want to risk anything on that trade. And then this was just very unfortunate because this is an entry model, but it wasn't a valid 1 minute pool. Like, what can I say? Very, very, very unfortunate. But yeah, very clean price action, 2 nice trades, and then price just decided to range a bit. And it looked like we had a model 1 up here. So we broke higher, created like a model 1 here, and then we went lower. Had another Wyckoff here. It actually looks like we had some nice trades on euro. I haven't really been paying that much attention to euro, mainly gold, and gold hasn't been giving me shit. So wait, let me see real quick. Let me see live with you guys. So came down, came up, came down, and we kind of broke the range right here, creating this as our new range. Okay, we broke structure right here. I'm gonna just leave that range for now because I want to see what happened here. So we broke structure, and then we formed a model 1 distribution right here. But was there a confirmation? You had your 1, you had your 2, you had your 3. Doesn't look like it. No, it's just a buy to sell. So maybe on like the 15-second you had a break here, but not really a confirmation. You came down, actually had a model, kind of like a model 2, like this, but also no confirmation. And then you came back up, sweeping that high that we put in, so your market structure high, sweeping it, while having like a bigger 1, 2, 3. Did you have a confirmation on that one? Yes, you did. But was it risk to reward worthy? Not really. It was only a 1-to-1. It was only a 1-to-1 if you entered on the break, which you should have waited for, and then can you put your stop above the internal high of like the test, not really the main high, to make it a bit better. But it was only a 1-to-1, but it's nice seeing it play out. But instead of breaking your local range that you created right here, you went higher again. And not really having any market structure to wait for or to break to find an entry, because that was all the way up here, and then you would have to cover like this low, this internal low, just to target that high. So that's not worth it. And then we came back higher again, kind of confirming that this whole thing in general was a range. Where this is a 1 tap, this is a 2 tap, and this is a 3 tap. And I think here there was a structure confirmation. Yeah, there was. Right here. So this could have actually been a short. But timing. Pretty good timing. Put your stop above the high. You should target all this whole move down. You should target the low. Damn, that has been dying off. What is this doing? Was there support down there? Is also very important. Yeah, there was a demand zone remaining. How does it look on a lower time frame? Yeah, you really came back for this 2 minute demand zone. Yeah, so this wasn't a valid. It was definitely a valid trade, even towards that extreme demand. I always like to take profit at extreme demand, if it's there. So enter on the break, put your stop above the high right here, all the way down to here. That's a 4RR. Damn, what was I doing? I really wasn't paying attention to euro. Um, but yeah, I would have definitely taken profit at below this low a tiny bit, then at that high, and then at this range demand. But still having my main target being this low. And the way we came up, we're leaving loads and loads and loads of liquidity below us, right? So maybe there could be a short. This is pretty high up, but it is possible, right? This is just a trade that I'm seeing on the spot, because if you have a Model 1 that did not hit its target yet and it comes up like this, maybe the market maker wanted to fill more short positions before really pushing price down. So this could be a potential Model 1 that goes over in a Model 2 right here. And this is your 50-minute supply zone, right? So price did have a reason to come higher before then going lower, because we also have loads of reasons to come down, because the main objective of the Model 1 has not been hit while we're leaving that return to zone below us, right? So there was one short on the euro. I just realized I really wasn't paying attention. I'm trying to mainly focus on gold and crypto, which yeah, it was a pretty nice trade. Pretty nice trade. I just got an alert on Bitcoin. Look at that. Yeah, that's coming down to here. That's coming to 60K. I would be really surprised if it didn't come down to 60K. What's Matic doing? Going down. Solana going down. Yeah. Okay. Well, I'm gonna sleep. I hope I wake up to alerts of Bitcoin just being at 60, because it shouldn't really have a hard time filling this imbalance. I think there was a 1 minute demand range or something. I don't even know. Yeah, there's this tiny thing here. Literally at 67.64 is where you potentially could get a bounce, but come on now. That's really searching for support. So if you get a confirmation on any backtest, you can short it down with your target being 60K, and then look there for the potential macro test long of the Wyckoff Model 1, or a bounce and then going lower. So watch your local market structure, find your local entries, take profits along the way, and I'll see you guys tomorrow.